Canada's GDP per capita is falling again, according to this recent chart from my good friend Ben Rabideau. Meanwhile, the GDP per capita in the US just keeps growing. And this surprised a lot of people who thought that GDP per capita in Canada would start growing after our population growth started to slow. But the losses to our GDP number have simply outpaced that. And so our GDP per capita is continuing to fall. And GDP per capita is very commonly used as a metric to measure the average economic prosperity or well-being of a country. And in Canada, this number's been falling for several years. This would mean that we're in what you would call a per capita recession. And we finally got to the point where we're in just a general recession as well. And what this means is that because we're back to like 2014 levels, Canada has seen very little growth in economic prosperity on a per person basis in over 10 years. And today I'm going to get into why that is and why it feels like a recession, even if experts aren't calling it a technical recession yet. So first off, let's start with what is GDP per capita? This is a new buzzword that economists are throwing around. And I actually came up with the term. I have proof, this tweet here that I put out on July 30th. And no less than a month later, a report from Alberta Central Credit Union economists mentioning how we were in a me session, not a recession. I'm actually kind of glad I didn't end up getting the credit for this term because all of the economists using it on the news were getting absolutely roasted in the YouTube comments. A me session or a per capita recession is basically when you and I feel like it's a recession personally, even if the overall economy isn't technically in one. The economy as a whole is holding up, but individual households aren't getting ahead. This like a personal recession. Maybe you haven't lost your job and news said that GDP is still growing, but you notice your grocery bill's sky high or your rent's up or your paycheck isn't stretching as far. It feels like a recession in your own life. And collectively, we were spending more and propping up economic activity, but individually, we're all cutting back and behaving like we're in a recession. That's a me session or a per capita recession. And we've been in that state now for like 4 or 5 years. And even though we're actually starting to see probably the first quarter of real recession, we're still in a me session. Usually, if you're getting into this first quarter of recession, if your GDP is falling, but your population growth is also falling, you would probably hope to see per capita standard of living increase, right? Because Canada's population growth has been shrinking. Whether you like that or not, or whether you believe that or not, it is. That's what the data is showing. So how can the economy grow on paper while we feel worse off? Here's a simple example. Imagine a coffee shop in your neighborhood. In tough times, you might skip your morning latte to save money. And if a lot of people cut back, normally that coffee shop sales would drop. But say a bunch of new neighbors move into the area, a huge high-rise building gets built. Even if the original customers are coming in less, these new folks buy enough coffee that the cafe's total sales are improved. From the cafe's perspective, the economy, let's call it, looks fine. But per customer, business is down. The average person is buying less. And that's exactly Canada's story. We've had strong population growth, new customers, and it's been masking the fact that we're individually spending less and feeling squeezed. And it's easy for a country to have consistent economic growth overall, but negative per person growth if its population is rising faster than its GDP. And that's what we've got. We've got a positive GDP number, or we had one until last, but GDP per capita was falling because the population jump is outpacing the economy. And now we've got both GDP and population growth falling, but GDP per capita is still falling. So now you've really got what I would call double trouble, which is where the total economy is going to be suffering, individuals are still suffering, and this is going to put a lot of pressure on policymakers, on the government. People are really unhappy about this. Canada is in very dire straits economically, and there are clear political and social consequences as a result of this. I mean, I haven't personally talked to anyone who feels like their economic life is better this year than it was before the pandemic. And there's data to back this up. Canada's population grew about 3% in the last year, one of the fastest paces ever. Those new people add to the total GDP by working, spending, etc., which keeps the headlines looking decent. But without that surge of people, we'd likely already be in a full-blown recession. We probably would have been a long time ago. The Bank of Canada's economists and others have noted that if not for the population boom, economic output would be drawn down and we'd undoubtedly be in a recession territory. In other words, immigration has been the lifesaver for the total economy, even if it hasn't helped your wallet lately. And it hasn't, based on the data. It's been more of a net drain on a per capita basis. Now, here's the worrying part, that population boosts, our secret sauce keeping GDP barely in the positive, might not keep up. We can't use that anymore. The government's adjusting immigration targets as a result of a lot of political pressure that they're getting from Canadians who are unhappy with the results of this policy because they're feeling like they've been in a personal recession for the last 5 years. And now we've got unemployment rising, and you're bringing in labor to compete with the labor force, and it's just going to have further upward pressure on unemployment and further downward pressure on wages. So if population growth slows and if nothing else improves, then total GDP might start shrinking. In plain terms, we could end up with both a technical recession and the ongoing recession, a double whammy. In fact, some economists are warning that pretty much already in what feels like a recession, and that an official mild recession, the real two-quarter kind, could be on top of that soon. The phrase recession-like performance has been thrown around a lot for what we're experiencing in Canada. So don't be surprised if the data eventually catches down to how people are feeling. And this is going to have a huge impact on sentiment, especially in the housing sector in Canada. People aren't super excited about going out to buy a house when they're in a recession and fearing job losses and economic contraction. So to sum it all up, Canada's situation right now is weird. By textbook, we're not in a recession. We will be, from my perspective, within a quarter. I think we're in one right now. Once Q3 data comes out on Statistics Canada, we'll be able to acknowledge that we've been in a recession for the last 6 months. But to a lot of Canadians, it felt like we are for the last 6 years. GDP per person is falling, and our neighbors to the south, the US, have pulled ahead. And unless things change, we might get the bad news of an official recession on top of the pain people are already feeling, which is a mild downturn on paper and a deeper recession in our lives. Understanding, because I see a lot of people in my comments saying, oh, we've been in a recession for 3 to 5 years, whatever. You're wrong. I'm sorry to say it. And I agree the technical definition is stupid and it should account for more on an individual basis. But if the economy was growing, it was growing. You just need to maybe use a different data point, or we need to use a different data point to really think about the standard of living of Canadians. But we're kind of just left with interpreting things in the technical standards that we were given by whoever, the economists, the government, the conspiracy of overlords who decides all of these metrics. So understanding what GDP per capita means and why you as an individual are feeling the pinch, and all of your friends and other Canadians that you speak to are feeling the pinch, can help us pressure our leaders and ourselves to find solutions, like the political pressure that we've seen on the rolling back of the temporary foreign worker program, the rolling back of the international student program, the reduction in Canada's multiple population growth streams. We need to be having the right conversation to put pressure on policymakers to do the things that we need them to do to solve these problems, whether it's boosting productivity, wage growth, letting house prices fall, getting interest rates down further, whatever it takes to grow the pie and our slices of it. If you found this breakdown helpful, give this video a like and consider hitting the subscribe button. I will continue to have you covered with more plain language explainers on the economy and the housing market and more. I also have a newsletter on Substack where I put text versions of most of these videos. It's free to join, and I tend to share deeper dives and more charts and the sources for a lot of these graphics on there. The link is in the description below. So please feel free to sign up, and I'll see you on there. And as always, thanks so much for taking the time to watch this video. It really means a lot to me that you take the time out of your day to listen to what I have to say, and I'll see you as soon as I can.